Okay, let's unpack this Alphabet earnings report. Q1 2025 dropped April 24th. And these aren't just numbers, are they?
No, not at all. They really give you a snapshot of the whole tech scene, especially, with AI becoming so central.
Right. So for this deep dive, we've looked at the official press release, an Investopedia piece, and those earnings slides they put out.
Yeah, and the mission here isn't just to read out the numbers. It's about pulling out the key insights. Where's the growth? What are the big strategic plays? Making sense of it all for you.
Exactly. So let's cut to the chase. How did Alphabet actually do overall in Q1?
Well, the big picture is definitely strong growth. Revenue was up 12% compared to last year,
Okay.
reaching $90.2 billion. And what's interesting is if you look at constant currency,
Right, take out the FX swings.
exactly, then the growth was actually 14%, a bit stronger.
Still pretty massive numbers. Though wasn't Q1 last year slightly higher growth, like 15 or 16% constant currency?
That's right, yeah. It was 15% or 16% constant currency in Q1 2024. So a slight moderation maybe, but still very robust growth at this scale.
A fair point. Okay, so what about profitability? How did that look?
Oh, that's where it gets even more impressive. Net income jumped a lot,
How much?
46%, up to $34.54 billion. That's compared to $23.66 billion this time last year.
Wow. And that translates into earnings per share?
Big time. Diluted EPS was up 49%, $2.81 compared to $1.89.
Okay.
And operating income saw a nice bump too, up 20% to $30.6 billion. Plus, their operating margin actually expanded
Expanded from what to what?
from 32% last year up to 34% this quarter.
Yeah.
So yeah, they're getting more efficient.
Definitely sounds like it. More sales and making more on each sale. And it seems like they're sharing some of that success with shareholders too.
Exactly. They announced a dividend increase, small bump, but still.
How much?
Up 5% to $1.21 per share for the quarter. Payable mid-June, June 16th if you're on record by June 9th.
Good to know for shareholders. And I saw something about stock buybacks as well. Another big authorization.
Yep. Another $70 billion authorized for repurchasing shares, both Class A and Class C.
70 billion. That's quite a commitment. What does that usually signal?
Well, generally it signals confidence from the company. They think the stock's a good buy, potentially undervalued, and it's a way to return capital to investors, reducing the share count.
Right. Okay, so strong overall financials, shareholder returns are up. Let's dig into the different parts of the business now. Where did the growth actually come from?
Let's start with the big one. Google services. That's, search, YouTube, Android, Maps, the usual suspect.
The core stuff. How did that segment do?
Pretty solid. Revenue up 10% overall, hitting $77.3 billion.
Okay, and within services, any standouts?
Well, Google search and others, still the main engine, right? Grew 10% to $50.7 billion.
Still dominant.
Absolutely. YouTube ads also grew 10%, $8.93 billion there.
Okay.
But the really interesting part, I think, was Google's subscriptions, platforms, and devices.
Oh yeah. What happened there?
Big jump. 19% growth, reaching $10.38 billion.
19%. What's driving that?
The report points to YouTube's premium stuff, music and premium, and also Google One Cloud Storage. They specifically mentioned crossing 270 million paid subscriptions across those.
Wow, 270 million paying subscribers. That's huge. Really shows people are willing to pay for those services.
It does, doesn't it? Suggests that push beyond just ads is working, making the ecosystem stickier.
Definitely. What about Google Network, the ad partnerships?
That was actually down slightly, dropped 2% to $7.26 billion.
Oh, okay. And profitability for the whole services segment?
Still very strong. Operating income was up 17%, $32.68 billion. And the margin improved too, from about 39.6% to 42.3%.
Very healthy margins there. Okay, so services looking solid, subscriptions especially strong. Let's pivot to Google Cloud. That's meant to be the big growth engine, isn't it?
It certainly is, and it delivered this quarter. Really impressive growth.
How impressive.
28% revenue growth, reached $12.3 billion.
28%.
Nice.
And what's behind that?
According to them, it's strong uptake of the core Google Cloud Platform, GCT, but also significantly their AI infrastructure and those generative AI solutions they offer.
There's the AI angle coming through strongly. And profitability. Has cloud finally, turned that corner consistently?
It looks like it, and it's a big shift. Operating income hit $2.18 billion.
Compared to
$900 million in Q1 last year. So a huge jump.
Wow. And the margin.
That's the other big story. Operating margin went from 9.4% last year all the way up to 17.8% this quarter.
From single digits to nearly 18%. That is a major milestone. What do you reckon is driving that profitability leap? Just scale or?
It's likely a mix, right? Definitely scale helps. More customers, higher usage, maybe some better pricing power, and probably just getting more efficient as the business matures.
Makes sense. Okay, what about the other bets? The moonshots, Waymo, Verily, that kind of thing.
Right. Well, as you'd expect, it's a smaller piece of the puzzle financially. Revenue actually dipped a bit to $450 million, down from $495 million.
And the losses, still losing money there.
Yeah, the operating loss widened slightly, $1.23 billion loss compared to about $1.02 billion last year.
So, still investing heavily in things that aren't paying off yet. What's the thinking there generally?
It's long-term bets, isn't it? High risk, potentially very high reward down the line. Think self-driving cars, life sciences. These things take huge upfront investment and years to develop. It's about future growth areas, diversification, investing in, what might be the next big thing.
Strategic optionality.
Yeah.
Got it. Now let's talk AI directly. It feels like it's woven into everything now, but how much did they emphasize it in these results?
Oh, massively. It was front and center. Sundar Pichai, the CEO, explicitly said their unique full-stack approach to AI is underpinning the growth.
Full stack, man.
Hardware, software models, infrastructure, the whole package. You also talked of Gemini 2.5, their latest AI model, calling it critical for future innovation.
And are we seeing that translate into actual product usage already?
Definitely. He highlighted AI overviews in search. Those AI-generated summaries at the top?
Yeah, I've seen those.
Apparently, they're now used by 1.5 billion users every month.
1.5 billion. Seriously?
Yep, since they launched it wide in May 2024, they called Q1 the largest expansion to date for AI overviews, reaching more users and handling more types of searches.
That's incredible penetration. Really shows how fast AI is integrating into just normal Google search for billions of people. What does that mean for websites trying to get seen?
That's the million-dollar question, isn't it? How do you optimize for an AI summary? It's changing the SEO game, for sure.
Definitely something to watch. Okay,
Yeah.
What about future AI investment? Are they putting their money where their mouth is?
Absolutely. They reiterated plans for massive capital expenditures this year, $75 billion planned for 2025.
75 billion on CapEx. Wow. Mostly for AI.
Primarily focused on building out AI infrastructure, yeah. The CFO, Anat Ashkenazi, even mentioned something interesting.
What was that?
That cloud demand actually exceeded their capacity at the end of the quarter.
They couldn't keep up.
Seems like it. Which just underlines why they need to spend so much building out that infrastructure. The demand for AI services is clearly surging.
So they're not just spending, they're spending because they have to meet demand. Are they relying only on their own tech or partnering up?
Good question. Pichai specifically mentioned their partnership with NVIDIA, called it a key advantage.
NVIDIA, right. The chip giant.
Yeah. Alphabet was apparently the first cloud provider to offer some of NVIDIA's latest Blackwell GPUs. And they're lined up for the next-gen ones too, the Vera Rubin chips, expected in 2026.
So combining their own AI smarts with cutting-edge hardware from partners like NVIDIA sounds like a strong position.
Seems to be the strategy, yeah.
Okay, shifting gears slightly. Any other sort of quirky financial details that stood out in the report beyond the main segments in AI?
Yes, actually. There was one line item, other income expense, net. It jumped significantly to $11.18 billion. That's way up from $2.84 billion last year.
Whoa. What caused that huge leap?
Mostly an $8 billion unrealized gain.
Unrealized gain? On what?
On non-marketable equity securities. Basically, an investment they made in a private company has shot up in value on paper.
Ah, so it's not cash in hand yet, but the value of their stake in some private firm increased massively.
Exactly. Non-marketable means there's no public market to easily trade it, but based on valuation changes, they booked an $8 billion gain. And that obviously gave a big boost to their overall net income and EPS for the quarter.
Right. Important context for that big net income jump we saw earlier.
Oh, yeah.
What about overall spending trends? Costs? R&D?
Well, total costs and expenses were up, but only by about 8%. Seems pretty controlled given the revenue growth.
Okay.
R&D spending, though, saw a decent increase up 14%. So they're still investing heavily in innovation, which you'd expect.
And capital expenditures. We mentioned the $75 billion plan for the year, but what about Q1 specifically?
CapEx in Q1 alone was $17.2 billion.
17 billion in 3 months? How does that compare to last year?
It's a 43% increase year over year from Q1 2024's $12 billion. So a really significant jump just in this quarter.
And you said the slides show that spending ramping up over recent quarters.
Yeah, the trend line for CapEx is definitely pointing upwards pretty sharply. Reinforces that infrastructure build out, especially for AI.
No doubt. Okay, one last financial metric. Free cash flow. How much actual cash did they generate after all that spending?
They generated a very healthy $18.95 billion in free cash flow in Q1.
And over the last year? Trailing 12 months.
Trailing 12 months, it's $74.88 billion.
It's nearly $75 billion in free cash over a year. That's a lot of financial flexibility.
It absolutely is. And remember, free cash flow is useful because it's the cash left after operating costs and those big capital expenditures. It's a non-GAAP measure, though.
Right, meaning it's adjusted from the standard accounting rules, and you need to see how they calculate it.
Precisely. They provide the reconciliation in the earnings release, showing how they get from the standard GAAP numbers to that free cash flow figure.
Good point. Okay, lastly, anything on geography? Did they break down where the revenue growth is coming from?
They did provide some color. We mentioned earlier that reported revenue growth was 12%, but constant currency growth was 14%, right?
Yeah, showing the dollar strength held back reported growth a bit.
Exactly. Looking regionally, again in constant currency to strip out FX, the strongest growth was actually in other Americas.
Other Americas, meaning Latin America mainly?
Presumably, yeah. That region grew by an impressive 23%.
Wow. And elsewhere?
Asia Pacific, APAC, was also strong at 15% constant currency growth. So yeah, good momentum internationally, especially in those regions.
Interesting. Okay, so let's try and synthesize all this. If you had to boil it down, what are the main takeaways from Alphabet's Q1?
I'd say, first, really solid overall growth, driven by both the core search business and especially that accelerating Google Cloud. Second, AI is not just talk. It's driving significant investment in infrastructure and starting to show up in user engagement numbers, like with AI overviews.
Yeah, the 1.5 billion user number is striking.
Definitely. Third, increased shareholder returns, the dividend bump, the big buyback. And fourth, that notable boost to the bottom line from the unrealized gain on that private investment.
And I'd add the cloud profitability story. Getting to that near 18% margin is a huge deal for that segment. Plus, search just keeps performing, now with AI baked in more prominently.
Absolutely agree. It really shows they're executing well across the board while making these huge bets on AI for the future.
So, thinking about all that, especially the scale of the AI investment, it really makes you wonder, doesn't it? This is a question for you listening. What are the long-term ripple effects going to be? Across different industries, in our daily lives, what new things, what disruptions might come out of this AI push in the next few years as these investments really start to, mature? Something to chew on beyond the financials?
It really is. And if you do want to dig deeper into the financials and all the details, the best place is the Alphabet Investor Relations website. You can find the full release, the slides, everything there.